Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, it's kind of funny. A couple days ago, I was reading an article, and basically the headline of the article was that the U.S. retail investor was more bullish on the stock market than ever. Now, that told me something. That told me that the longest bull market in history is about to come to an end. Now, I didn't realize how quickly it was going to end. I read that in the morning. By 11 o'clock my time, the Fed made the announcement, and then the market just started to go in free fall. Very fascinating. Now, what did the Fed do? Well, the Fed, they cut the interest rate by a quarter basis points, right? That should be no big deal. But the reason it was a big deal was they cut the short end. Now they control the 6-month and the 2-year kind of. The shorter end is controlled by the Fed rate, right? And they cut that by a quarter basis point, but the long end just exploded higher, right? Now what this means is that the Federal Reserve has completely lost control of the market. They're waving the flag against inflation. They're going, we can't fight it. We're going to have to cut, but they're starting to lose control of the whole marketplace. When this debt, the debt being the long end of the bond market, continues to go up, the interest rate, right? This is a big problem for the stock market, big problem for housing market. Now think about it, right? Okay, right now we're sitting about on the 10-year, 4.5, 4.6, 4.7. It's creeping up. Now, if that gets to 5, you're going to start to see the banks start going down. But I think it's going to get much higher than 5%. I think it's going to get up towards the 10% range. What's that going to do? Well, it's not going to be pretty. We are in a recession right now, according to Tall Mike, right? According to the government, where everything's great, man. Best economy ever. We're handing it over to the Donald, and we hope that he takes good care of it because we're giving them the best economy. No, we're in a recession right now, and we could head into a depression. Look, we just had an 11-day losing streak on the Dow Jones Industrial Average. Went down 11 straight days. Now, it was yesterday, I guess, it broke that streak, right? Closed up 15 points. 15 points is nothing. I mean, that was sitting up 200-300 points up and just came falling. If the market stayed open another minute, it would have closed down another day to break all records, right? It would have broken the Great Depression records. Now, a lot of people say, but Mike, that's just the Dow Jones Industrial Average. That's not the NASDAQ. I'm in the NASDAQ. That's going to go higher and higher and higher. It's the Qs, Mike. I'm playing the Qs. It's got Apple. Apple's making new highs. It's got NVIDIA. Oh, NVIDIA's not making a new high. Oh, that's right. That could be a problem, right? Well, look, if the Dow Jones goes down and the Russell's the IWM, the small caps, it goes down, it's going to pull the Qs down with it. It's going to pull the S&P down with it. Now, I think we have seen the top in the Dow. I think we've seen the top in the Russell, the IWM. Now, the Qs probably seen a top, but not for sure. S&P maybe a top, not for sure. You see, they come down, they're at their 20-day, right? It broke below the 20-day, but they haven't broke below that 50-day moving average yet. Once they break below that, it's straight down from there, right? Okay, now that's a possibility. Now, don't get me wrong. We're in the strong, it's not so much a strong time of year. It's a very low volume time of year where they like to push the market up or push the market down. Now, they pushed it down about as far as they can. The Dow very oversold, the Russell very oversold. I do expect these to make a rebound move into the Christmas week, into the Santa's rally, if you will. They will start to creep back up. But the VIX just spiked up, and that's going to start to come back down a little bit as we start to get a little bit of a rebound. Will we get to new highs? I don't think so. I really don't. I think that this market has seen the top in the Russell, in the Dow, and I don't think you're going to see those tops taken out for several years to come. Now, that's a scary thing. That's a big statement. A lot of people aren't going to like that. The Moon Boys are going to hate that, right? We've seen the top for several years in the Dow Jones, in the Russell. I don't think you're going to get new highs in those. Maybe we still push up one more time in the NASDAQ, in the S&P. We'll see how that plays out. A lot of people think we will. But here's what I want to talk about today. This is a little bit scary. Look, do not talk about this stuff at Christmas dinner, right? Even though you heard it from Tall Mike, don't tell other people. It's our secret. Okay, this is what I'm going to give you. That if you don't like scary stuff, you don't have a strong stomach, you might want to just click to another channel right now. Because I'm going to tell you what exactly we're on the verge of. We're on the verge of a total financial collapse. Total financial collapse. It's almost scary, right? Okay, so we only dropped, the big drop, what was it? 1,000 points on the Dow, maybe 1,200 in that day, right? And it did that in a couple hours, really. It started at 11 o'clock when the Fed announcement came out, my timing. The market closes 2 hours later and it dropped, 1,200 points. That's nothing. That's nothing. Look, if this market really starts to free fall, and it's going to happen fast. You see, a lot of people think they have time to get out. Look, it could drop 30% in one day. 30%. It could just, that was 3%. Can you imagine what 30% is going to feel like? Well, here's the thing. If we drop 30%, we pretty much wipe out the market. If we do it fast, if we do it in one day. Now, why is that, Tall Mike? Well, you got these things. They're called margin calls, right? Margin calls are going to be flooding in, but it's worse than that. It's worse than that. Look, if you get a 30% correction in one day correction, that's pretty much a crash, isn't it? You drop 30%. What you got is these derivatives in the marketplace. And derivatives, what are they? They're what the banks trade with other banks, But you can trade derivatives too. You got Apple stock, you got the Apple ETF, right? That's a derivative of the Apple stock. And then you got options on the double Apple ETF. So you got, you got derivative on top of derivative on top of derivative. And once these break, they can break in a big way. And believe me, it's estimated between 1 quadrillion, not trillion, quadrillion, 1 quadrillion and 3 quadrillion, because there's no way to measure it because they're unregulated markets. But here's the problem, right? Here's the problem. You drop 30%, even the people that won the derivative bet, they're going to lose. Why? Because the other person doesn't have the money to pay that person, right? So you got this, the market has been seized up and it will continue to free fall because it's seized up, right? Because the derivative market, let's just use 2 quadrillion, somewhere between 1 and 3 quadrillion, but 2 quadrillion. How are they going to print 2 quadrillion to bail out the derivative market? Can't be done. Well, it could be done. What would a cup of coffee would be $1,000, right? They cannot print 2 quadrillion, but the derivative market in the banking system is what's going to bring this whole thing down. You think about back to 2008. Now, I keep saying 2008, that's where the system broke, right? All we've been doing is printing money since then. We've been a facade. We've been a fake market, right? At some point, we're going to have to pay the price. And it looks like that price is going to be paid relatively soon. I hope we make it out of the month of December, get into January, at least get, through the holidays. I don't like to mess up anyone's holidays, but these derivatives are going to become tumbling down, right? And when you go back to 2008, AIG, you remember AIG? They were done. They were through. They were out of business. The problem was they had derivative trading with Goldman Sachs, right? So Goldman Sachs, if AIG went down, Goldman Sachs would have gone down with them. So the government, what did they do? Well, they had to go bail out AIG. All the money they gave AIG in the bailout, they just gave it to Goldman Sachs, which kept Goldman Sachs alive, right? So they saved the system with the printing of money, with the bailouts. You do not have 2 quadrillion in the government to bail out the system this time. This time, the system will be going down for real. And it's scary. It's scary. These banks are scaring me. And there's a lot of reasons for it. Number one is the 2 quadrillion of derivatives that's out there that nobody can pay for. But these banks, they got the commercial real estate going. It's not just the banks, the pensions, the insurance companies, they're in trouble also. But what you're noticing, it's the quiet things. You got to look for these quiet things that nobody else notices. Look, I noticed this, right? All the banks are reducing their dividends. Why are they reducing their dividends? Because they don't have money to pay it. They don't have the money that you deposited with them. So they got to reduce their dividends, right? Okay, so First Guarantee, right? Okay, they came out. You can look up their stock symbol, FGBI. This is a bank, I think it's Louisiana or somewhere. First Guarantee, right? So they cut their dividend from 8 cents down to 1 cent. That's basically cutting the dividend 90%. What did the stock do? Lost a third of its value in less than 2 weeks, right? Pull up the stock symbol, FGBI, right? Okay, another one, Flagstar Bancorp. They cut their dividend. New York Community cut their dividend. Eagle Bancorp cut their dividend. These banks are cutting their dividends by 80 to 90%. What else are they doing? They're closing up the branches. You notice any branches going out of business? I have to drive a lot farther to get to the branch of my bank because the two closest ones went under already. What are they doing? They're laying off employees. A lot of layoffs coming. Job losses are everywhere. But it's not just the banking industry. You can see the quiet signs elsewhere. Look, I'm a real estate broker, right? I know about the real estate industry. You want to do something fun? You can pull up Lennard. You can pull up Toll Brothers, LEN and TOL, right? Okay, those stocks are in free fall. Now, I had a small short positions and made a little bit of money in that, so I'm kind of happy about that because I knew they were way overpriced because I got the inside track, right? Nothing's selling right now. Nothing's selling unless you buy down that mortgage. They had to buy these mortgages down. Now, it's a year later, 2 years later, it's coming back to haunt them. These houses are coming back on the market, but they have other inventory to sell. They can't sell that. So you look at their stock, the stock is just free falling, right? And the whole stock market's going to start to go like that. Now you got the moon boys. And I'm telling you, we're probably going to rebound up to the end of the year. I'm hoping we do. Otherwise, it's going to be an awfully sad Christmas for a lot of people. I mean, some of those Bitcoin people, they got real sad, right? They were up here, 108,000. All of a sudden, they're whacked down to 95, 96,000. Now, that's not much, right? I mean, if you bought it at $1, bought it at $100, you're fine. You don't even notice that. That's a blip on the radar. What if you bought at 108? What if you're like my buddy that sold his house, bought at 100, now he's down 4 or 5%. So anyways, now his wife wants him to sell, so now he's going to put it in to money market. It's going to take him a year just to get his money back that he lost on Bitcoin. Be careful out there. Be careful with the cryptocurrencies. Look, I make fun of them. My last video was about Fartcoin. It's a real thing, $1 billion market cap. I don't think it's got $1 billion market cap anymore. But I mean, what I'm talking about is these things that there's too much froth, right? There's too much stupid money out there chasing all these things. And I mean, the only thing Fartcoin would do is you need a greater fool to buy it for more than you bought it for, right? Same with Dogecoin. Well, same with any of them, right? They all do pretty much the same thing. I don't think they do anything, right? But they're going to start to go down. Those market breaks, you're going to see an 80% drop in that Bitcoin. I'm telling you, just be careful. Look, I'm not saying it's not going to go from 96 back to 100, back to 110, 120. It's possible. I mean, you listen to Michael Saylor if you want. He'll tell you it's going to 30 million. What about the housing market? Just listen to Barbara Cochran. She'll tell you it's a great time to buy. Mr. Ramsey, it's a great time to buy. Why? Why do they say that? They're invested in it. What about the Bitcoin people? That's their cult. That's their religion. They can't say anything bad. You say anything bad, they will attack you. I'll get attacked in the comments. That's fine, but that's what they're pushing. You got to look at who's talking, right? Who's pushing the scenarios? Okay, well, maybe I'm pushing my scenario. Maybe I am. I don't know. My scenario, you should get some real money. Real money, it's held up pretty well. It's on sale. On sale right now. Look, you got silver below $30, down around 29. That's a bargain. That's cheapest asset on the planet. You got gold. It was at, what, 28 almost. Now it's 26. I mean, that's $200 you're saving on each ounce if you can find it, right? That's awesome. You want to stock up on this stuff while it's on sale. Now, can it go lower? Yeah, it can. I'm actually expecting gold to probably get down to 2,500. We're at 2,600 now. Probably another 100 drop. Some people saying 2,100. You want to listen to Harry Dent? He's calling for 1,000. I hope it gets to 1,000. Oh man, keep some dry powder. You always want to have a little dry powder just in case that Harry guy gets something right for a change. I've never seen him get anything right. I'm not that worried. Love Harry. Guy smart as can be. It's just the market, right? You print $30 trillion. All the systems go out the window. You can't predict it. I don't know what the Federal Reserve is going to do. Look at my guess. They're going to come in. They're going to start to buy the long end of the bond market, right? They have to. They have to. They can't let it run. They can't let that go up to 8, 10%. Your mortgages will be at 12, 14%. Everything's going to crash, and they have to come in. They're the only buyer. No one else is going to buy the long end of the curve. Short end of the curve, they can lower that rate, but every time they lower it, the long end just keeps shooting up on them. If I was the Fed, I don't think they sleep at night, man. I don't sleep at night. I stay up and I think about this stuff because it's fascinating to me, right? I mean, look at the dollar. The dollar, you look at the UUP, that would be the dollar index, right? I mean, it keeps going higher and higher and higher. Well, that's against other currencies. The dollar, you go to the store, it ain't going to buy you anything. I'm telling you, when this whole thing comes tumbling down, it's going to get real scary real fast, and it can happen in a day. It can happen in an hour. Look at that 3% drop in 2 hours. That's nothing. You watch a 30% drop come, you're not going to stop at 30%. They're going to shut the market down. There's going to be a lot of banking holidays where you will not be able to get your money out. So be careful with banking holidays. You're going to be hearing a lot about those in this coming 2025 year. But look, there's a lot of problems out there in the banking system. They're going to shut the markets down. The pension funds, they're not going to be able to pay you. They're not I mean, we have 200 trillion unfunded liabilities, but those pensions, they are so underfunded. It's ridiculous. You're going to be lucky to get 20 to 30% of your pension when this thing's break. I know I'm talking negative stuff around the Christmas weekend, but you know what? You got to talk about this stuff because we just had that big drop the other day and it's not over yet. Maybe we get that rebound. Anyways, you like this stuff, give me the thumbs up, punch that subscribe button. I'm Tall Mike. Get out there, everybody. Enjoy the weekend. Have a great time. Bye-bye now.